Viewers will recall earlier in the week I spoke about Spain's unemployment problems, with Spanish unemployment reaching more than 24%. It would appear that the rest of Europe is not immune from a similar issue. New data showed that European unemployment reached around 11% in March. This is the highest rate in 15 years. Looking at the US, there were similar concerns around the job market. A private report showed that private firms had increased employment by around 120,000 jobs. Now, while this sounds a lot, it was actually below analysts' expectations. Official data will be coming out relatively shortly, and all eyes will be on it to see what sort of health that American economy is in. Further bad news out of Europe too in terms of manufacturing. Manufacturing contracted across the EU, following suit with the UK data which came out yesterday. So what was the impact on the markets? Looking first at the equity markets, the Dow was off slightly on that unemployment news. However, European markets felt it much more strongly, sliding across the board. Looking at currencies, again the Kiwi's gone backwards, back down to around 81 cents US. It's even declined against the Australian. Schedule prices for lamb continue to slow and are now well under last year's schedule price of around $6.90. However, at prices of around $5.60 to $5.80, schedule prices are still well above the 5-year average. Looking at what happened over Easter, market in terms of chilled lamb continued to be reasonably strong. However, the same can't be said for frozen cuts. Frozen stocks are beginning to build up both across Europe and in the US, and this bodes poorly for prices going forward. One of the key issues is that with the grass market, a large proportion of New Zealand's product going forward is going to be in the over 30 kilo market. Unfortunately, both the US and Europe prefers cuts of a lighter weight. And one of the other issues too is with excessive Australian product in the market, we're actually going head to head with those heavier animals. So looking at prognosis going forward, with that continued downturn in Europe as well as that high New Zealand dollar, it's hard to see schedule prices improving anywhere in the short term.